We heard that we have an energy deficit at the moment. We heard that we're having a green revolution ongoing, but exactly where are we in that revolution? How are our energy supplies coming to us, and from what sources? That's the topic of our next panel. Welcome.
My name is Joe Flora. I'm the Director of State Government Affairs for the American Fuel and Petrochemical Manufacturers. Big name. I'll make it simple. We represent all the refiners and petrochemical manufacturers in North America. So all the big names you would think of that make fuel, both for transportation and for home heating and other applications. I'm honored today to be able to moderate this panel of subject matter experts. The title of the panel, the title of today's talk, is Energy Usage and Reliability in New Jersey. So we're going to go into a little more of the details of the prior speakers' wonderful comments. And we're going to start by introducing the panel. I'm going to start with Cynthia. Why don't you introduce yourself?
All right, good morning, everyone. I'm Cynthia Niemeyer-Tieskoetter. I'm with the American Petroleum Institute. For those who are less familiar with API, we are the largest trade organization for oil and gas companies. We represent around 600 members, and everyone from the upstream producers to the midstream operators to the downstream refiners, the LNG exporter, your oil services, and everyone in between. Specifically for myself, I'm a policy advisor in our natural gas markets team, so I deal a lot with anything that impacts domestic demand of natural gas, and consequently, a lot of that has to do with the power sector. And we play on both sides of this equation. Not only is the power sector the largest user of domestically produced natural gas, but we also use a lot of electricity as the end user for a lot of our refineries and even upstream production and everything else. So there's a lot here. I also do a little bit of trade, but I don't think we'll touch on that today. And grid reliability is a hot topic. I think we had a great primer in the opening remarks about what we're going to touch on. But at API, we believe that natural gas really is primed to be one of the main fuel sources to meet this moment and to meet this load growth. We see a lot of different forecasts and predictions, and no matter where we land on, we know that this is an unprecedented time and that new demand is coming. In the last 10 years, the demand for natural gas has increased around 49%, but the natural gas infrastructure has only increased 26%. So if you do that math, it doesn't quite add up, and we're running into a deficit of energy infrastructure, and we'll get more into later why permitting reform is going to be an important part of this topic and conversation. So thanks for having me.
You're welcome. Matt?
Good morning, everyone. I'm Matthew Schwall. I work for Alpha Generation. We are a large independent power producer. We are the largest private owner of thermal generation in New Jersey, New York, and Connecticut. In New Jersey alone, our portfolio is 4,000 gigawatts. That includes combined cycles, combustion turbines, and portfolio-wide, we operate 14,000 megawatts across 6 states and 3 markets. My part of the team is I'm on the regulatory/government affairs team. That means I'm monitoring the going-ons in the 3 markets in which we do business, PJM, ISO New England, New York ISO, as well as the going-ons at the various legislatures and regulatory bodies. So very interested in talking about power generation, particularly in New Jersey, what can be done better and what has been done well.
And Tim, would you like to introduce yourself?
Yeah, thank you. So, So my name is Tim Burdis. I am with a organization called PJM. I'm based in suburban Philadelphia. We operate the power grid for this portion of the country. We go from Jersey out past Chicago, down the Ohio Valley, and out into the Outer Banks of North Carolina. We're just about to celebrate our 100th birthday. We are an organization that formed in 1927, so we're fast approaching that, and we're an organization that started as a result of 3 electric utilities in eastern Pennsylvania and New Jersey, and we're highly proud of being able to provide this service for the long period of time that we have with our utility partners, especially starting off here in Pennsylvania and New Jersey. I look forward to sort of outlining the dates in which we sort of got here and where we find the reserve margin at. And I am looking forward to the conversation.
Thank you. So for somebody like me, when I first met them and I understood the different parts of the industry they cover, I'm just going to make this real simple. The entire industry, power generation, and grid operation. Those are the people we have here today. We're open to taking questions as they come up or at the end if we have time. Moderators always say we want to make this a discussion amongst the people that are here. I think we really embrace that. We've been talking about this now for several weeks, but today's panel is meant to explore the evolving energy landscape and its challenges. And we all know there are challenges here, as the previous speaker indicated so eloquently. We're really up against it. We've made plans, and I think it suffices to say it may not be solved in the next 12 months. But with that in mind, and I'd like to start with Matt from Alpha Generation. Can you say some things or make some statements about the current state of energy usage, the grid reliability, what you guys face as a business, and where we are right now?
Sure. So I think it's obvious to everyone in this audience that energy affordability, reliability, and load growth are the focus of conversations, not just in New Jersey, but across the PJM region. And when I think about the various elements of power generation and policymaking and where they intersect, there's really three areas of focus. There's affordability, there's reliability, and then there's environmental concerns. And I think we operate as an independent power producer in the wholesale market, which means that when we make investments, it's entirely at our own risk. We don't have contracts, we don't rate base. So forecasting is very important to us. Do we think we're going to make a return of and on our investment? And there's a lot of elements that go into that. For the last 10 years, energy prices have been very stable in New Jersey. If you look at power costs as a percentage of your bill, they are less than half of the total cost of the bill. There's a study out there by energy tariff experts that indicates over the past 10 years, it's about 45% of your bill. Markets have delivered that. On the reliability side of things, we've maintained a reliable system in Jersey in part because of the benefits of competition. We've had retirements in the state of coal-fired generation as a result of economic drivers. They weren't performing well in the marketplace, but they were replaced by new generation. We own and operate the Swarn 7 combined cycle station. That's a highly efficient combined cycle plant that replaced retiring coal generation. And that investment was made at risk, and we continue to invest in those facilities at risk. But there's lots of considerations when it comes to investing in those facilities. For example, one of the drivers of coal generation beyond, or in addition to market dynamics, was the Regional Greenhouse Gas Initiative. That places an added cost on inefficient generation. However, with no remaining coal generation in the state of New Jersey, it just adds a cost to combined cycle highly efficient generation, a cost that isn't faced by generators in states that are not part of the program. So when I think about, as a power generator, where do we put our money? It's difficult to justify putting money in a state where the benefits of highly efficient generation maybe don't play out as well as they could. I'll pause there.
Tim, did you want to go next?
Yeah, if you don't mind. So I'd like to just maybe put everybody back to a certain date. And for a moment, just put yourself back on this particular date. It's November 30th, 2022. And on this date, the PJM region has what we call a 20% reserve margin. That is a cushion over and above the amount of generation that we need, and that's to account for statistical anomalies around weather and around generator outages, things like that. Machines break. So that's the period of time in which we're sitting. The reserve margin you kind of want is around the 14% range, so we're sitting above where we need to be at. November 30th, 2022, that's the initial release date of ChatGPT. Fast forward about a month, we have what is called Winter Storm Elliott, It grips the entire eastern part of the United States. PJM, for our part, as a system operator, we don't run into any load shedding events. Other neighboring regions do, but we get very close. We get very close to the edge with where we're at there. Fast forward another month, January 2023, we put out our annual load forecast. And for the first time since the Great Recession, we're seeing an actual increase in our load forecast. Previous to that, it's been flat or declining. And our load forecast is predicting by the end of the decade, in 2030, so 7 years, we'll have somewhere between 4,000 to 5,000 megawatts of increased demand on the system. February of 2023, PJM puts out what's called the 4R report. It says, hey, we're looking at a lot of system retirements. We're not seeing new generation come onto the system and take their place as quickly as we would like. We see some policies that are out there at the federal and state levels that might be indicating retirements here by the end of the decade. And there's this thing called data center development. You know, it's been around the edges in some parts of our system, but it's starting to pick up. And if we see that increase, we might have some issues here by the end of the decade on our reserve margin. That date, February 2023, the stock price for NVIDIA is $23. Today it is $191, right? Let's fast forward to 2025. Today our projection, when it was 4 to 5 gigawatts by the end of the decade, we are now projecting 32 gigawatts of additional demand on the entire system. An insane amount of increase here. It's consolidated in some parts of the system, but frankly, it is also spread across with a bunch of different areas. The capacity market that we cleared when we had the 20% reserve margin that I spoke about back in November of 2022, we are now at pretty much zero. We pretty much cleared out our reserve margin. All hope is not lost, right? Clearing out a reserve margin does not necessarily mean outages are imminent, right? A limit on a bridge is 500 pounds. If you have a 501 pound vehicle, can you go over? Yeah, probably, right? Is it the safest? Not necessarily. That's kind of where we're at here at the moment, but the forward trajectory doesn't look the best. What do we need to do? We need to keep on what we have, and I'll give a lot of credit to the New Jersey DEP as well as the New Jersey BPU and Commissioner Christodoulou and his colleagues, the New Jersey Greenhouse Gas Reg. I think that there's been a lot of good work here with the agencies in New Jersey to try to work with the owners of those assets to bring them into compliance but keep them on the system for the reliability problem we have. We've got to build. We've got to build more. We've got to permit it. We've got to get it sited. We've got to get it built. We have 63,000 megawatts with signed contracts out of PJM's queue ready to build, and they're languishing for one reason or another. We've got to attract new megawatts. We have different processes that I think we've put into place to help do that, but we haven't quite done that entirely. We've got to attract new megawatts. And the new thing that we've added since we last talked about this impending reliability crisis back in February 2023 is this idea of load flexibility. You can build a data center, which is almost exclusively the demand, the 32 gigs that we have on the system coming on by the end of the decade. You can build that in 18 to 24 months. You can build a new power plant 5 years if you're lucky, perhaps. We are not going to necessarily just build the way out of the problem in the short term if we're going to see this much demand. So that's the message with where we're at here, is we've got to put those 4 pieces of the puzzle here together with where we're at.
Wow, thanks, Tim. Cynthia, you have a view that not many companies have individually because you cover an entire industry. What's your thought on the current state of affairs, and what feedback are you getting from member companies?
Yeah, well, I think there's a lot of excitement about the current state of affairs, although there's a lot of trepidation too going forward. You know, when we look at the load forecast, and we're always, from API's perspective, we're looking at every single one that's out there. You know, I think on the low end of the case, by 2030, the U.S. is expected to have an increase of like 165 terawatt hours. At the high end, it's 1,060. 1,060 terawatt hours is the size of Japan, and the difference between the highest case and the lowest is 3.5 times that of California. So how do these two gentlemen plan for that moment and what it could be no matter where we land? At API, we tend to take S&P, they're kind of in the middle, and they even think that we're going to see 35 to 40% increase by the end of the next decade of 2040. Now, the region we're sitting in here right now is really primed to take this momentum and do something really great with it. Right next door to New Jersey is Pennsylvania, the second largest natural gas producing state in the country. And I can tell you, the producers there are desperate to get some pipelines, get it into New Jersey, get that gas, and get it where it needs to go. By 2030, we expect that the Appalachia Basin, so combining both the Marcellus and the Utica, will increase production 7 BCF per day. So that's what, a 25% increase in just 5 years. If we look at the last decade, overall US natural gas demand went up 14 BCF per day. A lot of that was due to coal to gas switching and just kind of the natural increase that came with that. And then as we look forward, we're still looking at some of that happening, but then we're looking at upwards of 18 BCF per day of an increase in power burn demand for the United States. And so I think what it really comes down to, though, is in order to unlock this natural supply, because one of the questions we get a lot is, where do we stand on the natural gas supply aspect? And our members, in the United States, we are blessed with so much natural gas. Our members are primed, they're ready, they're improving, their operations for this moment, but we consistently get constrained from an infrastructure perspective. And you need that takeaway capacity in order to make sure that you're getting that supply to wherever it needs to go. So at API right now, and this is both from the federal and the state perspective, I think there's things that can be addressed in both angles. And really what it comes down to is, we need to set targeted reviews. 7 counties, the Supreme Court case that happened earlier in the year was really helpful in that, making sure that any project, as it's going through the permitting process, is really looking at the direct impacts of the project. We need to make sure that we have deadlines. So every part of the permitting process, not just, a page number count, which is helpful, but we go a little step further than that to make sure that the decision-making along the way keeps moving. And then from a third perspective, making sure that we, the lawsuits, we believe everyone has an opportunity, everyone's voice is important, but we make sure that the lawsuits are happening with people with appropriate standing, and we get through that and we really start building, because that's kind of what keeps challenging our industry. And I think specifically for a state like New Jersey, when we look at, we kind of think of this as a 3-legged stool. It's affordability, kind of to your point, affordability, reliability, and sustainability. New Jersey, I think, has gotten a little bit off on their stool, and it's a little bit lopsided. Your policies and your regulation need to stay tech neutral. The Lawrence Berkeley National Laboratory and the Brattle Group put out a great report just last week that looked at a whole bunch of different things, but one of my takeaways from it was, states that have a lot of renewable build-out, you don't see that necessarily impacting retail rates or any of that sort, but you do start seeing some impacts when you start mandating and you start influencing the market in ways that the market doesn't want to go. API is an all of the above organization. We think every single electron is needed at the moment, but we need to make sure that our regulation is there so that we're addressing everything at the same time and together.
Thank you. So we have, I don't want to say the perfect storm, it's a little cliche, but basically we've maxed out on power production right now. There's the opportunity for more, but there are some hurdles to that. The grid is aging and hasn't been replaced, but even if you could, the emerging business is demanding more and more power, and we're in a situation where from a regulatory perspective, you don't necessarily see across not only New Jersey, but a lot of states are not partnering with business to get to the right answer right now. There's a little bit of a disconnect. I'd like to dive a little more into that. Matt, why don't we produce more power? I know you touched on the efficiency of some of your assets. Can you make them all more efficient? Can you start building? What's the hurdle?
There's lots of ways to squeeze more efficiency out of plants. Certainly the newer plants, combined cycle plants with upgrades, excuse me, you can squeeze more energy out of them. So for example, we have 2 upgrade projects that we're pursuing in New Jersey. We have a 300 megawatt upgrade project at our Linden combined cycle facility and a 56 megawatt project at our Bergen facility. And just to put that in context, those are upgrades at very high capacity factor facilities. So when I add 300 megawatts to a newer vintage combined cycle, I'm getting anywhere from 60 to 90% of that capacity, right? That's the equivalent of adding 3,000 megawatts of solar. So these are significant upgrades, and they're costly. And because we make these investments at our own risk, based off of our projections of future market revenues, you know, it's a big decision to make. And there's lots of factors that go into deciding whether to make that investment or not. One of them is, you know, what is the current state of PJM's markets? What do we expect the future state of those markets to be? Where are prices today? Where will they be tomorrow? Now, at today's prices, we see a pretty clear signal that more capacity is needed. As Tim mentioned, we're clearing at the margin, so it's very clear to us. However, there are price caps in place right now, and price caps are an indicator that there could be future price caps or declining price caps. And those are the kinds of things that create a level of risk that we need to take into account when deciding when and where to invest. It's really important to have the support of a state from a policy and regulatory perspective when you're looking to put in up to $500 million of new capital in these facilities. And you know, what we have seen recently is, I think, a changing of perception as it relates to fossil generation. You know, fossil generation, combined cycle generation, is state-of-the-art technology. It's going to provide you the most reliability and the most capacity as affordably as possible in as short of a time frame as possible. The energy system is complicated. It takes lots of pieces to build the puzzle. Different technologies offer different benefits. And so I think it's Commissioner Christodolo had a really interesting comment earlier about agnosticism. I love that comment because I think it's very important to be realistic and pragmatic about the benefits certain technologies offer a system.
Is it safe to say that there are other opportunities within your market that if you were going to invest may have less risk? Are there other states, are there other regions where you say, look, if I have $500 million, I don't even know if New Jersey is first on our list of where we might develop until you have more, you can lower your risk by changing perhaps how the assets are perceived.
Absolutely. I mean, we do business in 6 different states. One of those states is Ohio. We have a newer combined cycle plant in Ohio. Ohio passed legislation, HB 15 this year, that was very pro-competition. It was pro-competition explicitly, but in addition to that, it also is explicit in stating that there would be no rate-based subsidization of new generation. And the reason that's important is if I invest $250 million in one of our plants in New Jersey, and then in a few years, or this year, I find out that new generation is going to be rate-based, and utilities are going to be allowed to construct it, that's going to undercut my investment. I'm not going to make a return on my investment in the long term. So we're very pro-market. We want the markets to send the signals for investment. We see that in some states more than we see it in other states. So I think it's very important for policy and regulatory rulemakings to support private investment.
Thanks. Tim, what are your thoughts on this? What's the future state, and how would you respond to some of the comments that your counterparts on the panel made this morning?
Yeah, so I mean, I think, you know, from an investment standpoint, and I'm speaking about this, you know, at PJM, we don't have any express professional judgment on the investment. I mean, Matt and his company and others like it are on the front lines every day in having to make these decisions, right, and make the commitments. But, you know, I think, you know, back in the period of 2022 or so, we're clearing capacity prices in $30 range. And now we're up at the price cap, $3.29, something like that, right? So when you're back in the period where it's like $30 prices or so, there's not a lot of incentive on the demand side of the equation to necessarily contract on a forward basis to get new stuff built or to keep existing stuff around, because I'll just let a lot of my portfolio ride on the spot price of $30, right? So that's kind of the dynamic that the market was signaling at that sort of period of time. And I think we have a lot of load that's exposed to riding on the spot price. Where we find ourselves at now is that at least the investment community, I won't speak for Matt specifically, but I think one thing I did hear is that there's at least questions about whether or not I'm willing to invest on merely a one-year price signal that the market is producing, that 329 price, for instance, because this is a 20, 25, 30-year asset. And I have to have assurance that I'm going to have some payback period. I have to have some assurance that I'm not going to get regulated out of existence. And so I think the solution, a solution, in part, there's not just one solution, is to work to try to promote longer-term contracting with the demand side of the equation to get more things built, right? Maybe an investor doesn't need 329, this year or that year, right? Maybe they can live at 125 if they know, or 200 or whatever the price is, if they know that they can get it for 7 years. Now that puts a little bit of risk on the demand, right? Because the market may recalibrate. The AI bubble, maybe it pops, right? Maybe we don't have all of that demand that's necessarily coming in. But that's really the point of managing that risk on the demand side, is to build a portfolio, right? I liken it to creating a financial portfolio. If I want to have a 6% return year over year over year to get to my retirement, right? I construct the portfolio to have different assets and securities to get me that 6% return. So if one thing goes this way, that goes that way, I get my 6% roughly, right? I'm not doing 14% and 2% and hoping I get the average over time. That's perhaps a way that the demand side of the equation can try to provide some level of stability in the pricing and not the volatility, is to at least inject some of this longer term procurement here into the dynamic. And I think we need to be able to promote that, especially for this new demand coming onto the system, right? We heard Commissioner Christodoulou talk about sort of the speed to market is incredibly important, right? And one of the reasons, there's a lot of reasons, but one of the reasons PJM is an attractive region for data center development is because we had excess generation on the system as opposed to other parts of the country, right? And if speed to market is important, let me go try to get onto the system where they have some excess laying around and I can go get it. Well, the problem at the moment in time is how much of that new demand is willing to do a longer term contract to not just lock up existing prices and keep some volatility out of the market, but also incent investors to make longer term investments in new generation.
Thank you. Back to Cynthia. Your members, as you're saying, are expanding gas production. When they look at the future state, is this years or decades? I mean, obviously, it's challenging to build a new pipeline. What are your thoughts on the time frame for all this to develop?
Yeah, our members look at their investments in decades, which is one of the things that makes the political environment in today's world really challenging, because the investment made now is presidential cycles away. When we look back, the Hoover Dam took like 4 years and 4 months to build. The Golden Gate Bridge took 4 years. Empire State Building took 1 year and 25 days. And now the Mountain Valley Pipeline takes 10 years in an act of Congress. I mean, that's unworkable for long term. That's infeasible for our industry to try to be making those long-term investments with a lot of certainty and confidence when you have such a challenging environment in front of them. Last year, before the presidential election, API put out our 5-point policy roadmap, which looked at 5 things that the industry needed to happen in order for some of these investments to go forward. And we purposely did that prior to the election, because we wanted to send a signal that it didn't matter who ultimately got into the White House, but these priorities remained steadfast and they remained the same. So far with this administration, 5 of those 4 priorities, we can put a check mark next to them, and they include things such as protecting consumer choice, which is a theme of API. We really want consumers in industry and business to be empowered to make the decision that's best for them. Bolstering our geopolitical strength, leveraging our natural resources, advancing sensible tax policy, and the fifth one that doesn't have that checkbox next to it is the permitting reform aspect. We'll see if this Congress can get it together and open up and allow us to go forward with that. But absolutely, we're also constantly looking at market signals and trying to do what's right, and it can be challenging in this regulatory environment to do that at times.
No, I bet. I'm with you. I appreciate you guys talking about the current state and looking forward. We're going to get into this section now. We were going to ask for questions, but I can start it off. And I've talked to you about this before, but I always find it fascinating. The Regional Greenhouse Gas Initiative, Matt, you touched on it, but I offer this to any of you. Is it still effective? Is it still doing what it was intended to do? And any comments you have around what you're seeing in the market based on that?
Yeah, I'm happy to jump on this one. So RGGI has been a success.
Maybe you could explain what RGGI was meant to do
so the
first.
Regional Greenhouse Gas Initiative, it's a multi-state compact where the states agree to essentially price CO2. And there's a competitive process where generators bid into an auction and you purchase allowances that decline over a period of time. So as those allowances decline over time, or as more energy is needed, the cost of those allowances increases. So all across the Northeast, including certain states in the Mid-Atlantic, New Jersey is one of them, coal-fired generation has gone away in all of those states. There's no coal-fired generation left in New Jersey. So today, you have combined cycle, highly efficient generators in the state of New Jersey that pay now a RGGI price that is in excess of $20. And what that does is it makes those highly efficient generators less competitive than less efficient generators in states like Pennsylvania and West Virginia, who are not part of the RGGI program. And it means that those units get dispatched in PJM's markets before generators, gas-fired generators in New Jersey. There's a study by a very reputable energy and economics consulting firm called TCR that came out earlier this year that looked at what that's doing to PJM-wide system costs and emissions. And they found that New Jersey's participation alone in RGGI at current prices is increasing emissions by 2.7 million tons every single year. And if the state were to leave, not only would those emissions decline, but it would save ratepayers anywhere from $300 to $500 million a year, depending on where the cost of a RGGI allowance is at that time. So for a company like us, we literally see our units run less than our competitors in Pennsylvania, even though we are cleaner. And in terms of future investment, it's difficult for us to invest in existing units when we see policy like this having such unintended consequences and nothing is being done about it. In fact, there is an initiative right now to propose and adopt rules that would further reduce available allowances at a time of increased demand and not additional supply coming to the market to offset the need for allowances for existing units. So it's a real challenge for us.
Would either of you like to add anything? Or has Matt pretty much said it all?
I'll just add, from the API perspective, we support carbon pricing. Reducing emissions is something that's really important to our members across our own value chain. And just for instance, since 2015, our members have increased their production 50% across oil and gas and have reduced their emissions 60%. So we're really conscious about this kind of stuff. But we think that any sort of carbon pricing needs to be economy-wide. RGGI doesn't meet that for us, and so it's something that is challenging. And I think, the states that are able to recognize when something's no longer working and they're able to pivot are going to be the ones that are going to reap the economic opportunity and the economic benefit that this moment allows. And those that don't are going to leave it on the table for other states to capture.
Yeah, just one final point, because we totally agree. We would support carbon pricing if it were economy-wide, or at least with RGGI, if you had the largest suppliers of generation join RGGI, like Pennsylvania, like West Virginia, but given the politics at play in those states, it's pretty clear to us that that's not going to happen anytime soon. So for that reason, I think New Jersey needs to reconsider what it can do on its own.
Tim, anything to add? You got no. But so just to summarize what you guys are saying, it was a good concept that may have currently, based on the current state of affairs, outlived its effectiveness.
Yes.
Because now we're still paying to have greener energy, but because of the demand, we are buying energy that is less green. So we're not only paying for it here, we're paying the expense to have, the coal burning or whatever we're getting from outside New Jersey shipped back in here to use.
That's it.
But it can be a very politically charged issue, right, about whether you're in RGGI or not. So I could see that from a policy perspective, but I appreciate you guys being so frank with us. I would open up to other questions. Does anyone have any questions for our panel?
What are you guys doing for the general public so you can educate them? What are you guys doing as an elected team there? How are we educating the people so they can influence the lawmakers?
I will say it's almost like that was a planted question, and it wasn't. But if you go out these doors and take a left, you will see our Energy Citizens booth, which is something that API, and we have some of my API colleagues here in the audience who do exactly that, who talk to businesses, who talk to citizens, and who really try to help everyone understand these issues. So it's not just us, who are working day to day, but everyone can see what's happening, what they can do, and how every person can be empowered to bring this message forward to their regulators or their lawmakers. So I do encourage everyone, if you have any questions or you want to see what this can do for you and your business, go visit our booth out there. It's called Energy Citizens, and they can give you more information.
I'd like to add AFPM, as I said, we represent refiners, so we're in the refineries a lot. We're in the petrochemical manufacturing facilities a lot. One of the things we do is called Get Out the Vote, where we encourage people just to register and vote and participate because it matters. And many people in the legislatures I deal with don't necessarily understand all the facets of how energy is there. They only know when it doesn't work. And you get criticized for something. But the story we always say is, nobody understood. At the time of Superstorm Sandy, I worked for Hess, and we were just rolling along. We were a New Jersey company with a wonderful history. When Sandy hit, and they couldn't deliver to oil, which runs diesel generators, and electricity was out, everybody freaked, and suddenly you have all these governors calling saying, "Hey, you guys are our best friends. When can you ship us stuff?" And literally, as soon as that problem was resolved, the next month, they were like, we don't like this fossil fuel stuff. We have to get rid of it. But it's the dichotomy we deal with. But we actually try to engage directly with employees in the industry so they can tell their family members, their friends, go out and vote, be aware of energy policy, be aware of transportation policy. I don't know if you guys would like to add anything about...
We wrote an op-ed on RGGI. But we're not a very large public-facing company. I know PJM has a lot of really good resources on their website about the state of reliability, what that sort of stuff. So, Tim.
Yeah, we're also not a large general public-facing organization. We have, daily interactions, obviously, with the New Jersey BPU and the great folks over there. And that's, obviously the market participants and the utilities that participate in PJM. I think one of the things that we're actively doing right now, literally as we speak, is moving toward trying to build consensus and an eventual filing here in December around what can we sort of do, at least in part, as a bridge solution to try to accomplish what is a very challenging dynamic of bringing the demand onto the equation, having affordable electric pricing as well, right, where supply and demand are at such a hair's separation here, you're going to run into the pricing dynamic of being up at the cap. And for how long is that at all sustainable for the general public at all, right? And so what we're actively doing is how do we play our part to bridge the solution to help with reliability, with affordability, while at the same time making sure that we're not challenging the national security and economic prosperity interests of the AI revolution, right? And so we have a host of activities that we're doing, working toward this December filing, but a lot of it is around how do we get more stuff on the grid? How does the stuff get sited? How does the infrastructure get built, right? It's what about load flexibility? What can we do for this new demand that can either bring generation with it, that can long-term contract to bring it with it, or can be flexible to actually come off of the system when we need it. And so that's really the dynamic. And also keep what we have on the system at the moment. We are in an energy transition, but I think at the moment we're in an energy addition, right? We are not really in a place where we can necessarily see stuff go off of the system. And I think that that's been a message that's been fairly well received given this dynamic here with the large load interconnect or the large load additions. Last thing I'll just say, because I'd be remiss if I didn't say it at least to this audience, because sometimes I hear, well, why aren't you just gatekeeping the stuff coming onto the system, right? If you don't have the generation to let it come onto the system, why are you letting it? And one is the national security, economic prosperity aspect. Of course, that needs to happen and the economy needs to grow, right? The other is that PJM doesn't have any control over what or when load comes onto the system. That is a process with the local utility, and even to their part, right, they don't have the ability to discriminate, absent the state telling them they can, any load wanting to come onto the system, or really gatekeeping their ability to come onto the system with a certain given point in time. So it's just one thing I do want to point out, that we're not really in a place where we can be a bouncer here at the nightclub and say, sorry, we don't have enough generation to necessarily serve you yet, right? And so we're trying to think about how do we signal to the market we need something else, have affordable power for the general public, and also serve this unquenchable thirst for power delivery and demand that wants to come onto the system.
Thank you. Any other questions? We can't see what somebody.
We got one right here.
Okay.
Good morning. Just to the gentleman from PJM, you were just talking about loads coming onto the system, and frequently there's this, for the taglines for most of the stories, there's the same issue that PJM is preventing generators from coming onto the grid, and that there are many generators, and I don't know the number, maybe you do, but there are many generators that are in queue to come onto the grid, but can't make it onto the grid because of PJM's hurdles. Would you mind explaining that a little bit more so we can get a better understanding of what's happening there?
Yeah, absolutely. So for generation to come onto the system, we do have a process. So you have to get into a line effectively so that we can study you with the local utility to make sure that the megawatts you're going to put out onto the system are reliable and that you're not going to burn down the grid, right, and create a problem. And so that's the process there. We had over 200,000 megawatts in the grid, or I'm sorry, in our queue right before the 2020 election. They all rushed into that queue at that period of time. We have over 60 gigawatts with signed contracts that could build tomorrow if they're able to. Now, they're running into issues for one reason or another: supply chain acquisition, interest rates, permitting, right? So the narrative out there that PJM's queue has been the holdup for this, while perhaps partially, perhaps some of that stuff could have moved a little bit quicker. The fact of the matter is, again, we've had for several years now many megawatts with signed interconnection agreements, and stuff's just not coming onto the grid. And that's one thing we need to promote, that stuff coming more and more and more. We want stuff to come onto the grid.
I think that's all we have time for now. I just want to ask you guys to join me in thanking the panel for taking the time to speak to us today and give us some insight. Thanks, guys.